Hey, good afternoon, everybody. It's Ronco Johnson, your lifestyle-focused wealth coach. Thank you for joining us. This is When the Lights Go Out. Are you ready? Happy Friday. Happy Friday, everyone. It's good to see you. Thank you for joining us. Hey, today we're going to be talking about a second episode. We're going to be bringing it up in a different way. We're going to be talking about the leverage that wealthy people use, life insurance, versus how people of lower wealth view life insurance. You know, we had a conversation about a point of view from wealthy people to people who make less income and how they view debt. Well, this time we're going to talk about how they view insurance. And it's amazing. I think if you just stick around and stand by, you're going to find out that the same product is thought about differently depending on your economic scale. Right here on When the Lights Go Out, are you ready? I'm Ronco Johnson, your host, and I am looking to see you on today's episode on the inside. So stick around, don't go nowhere, sit back, relax, and unwind with your boy. And I'll see you soon. Hey, it's Ronco Johnson, your lifestyle-focused wealth coach and advisor and your family friend. Thank you for joining us. This is When the Lights Go Out. Are you ready for another episode of Lifestyle-Focused Wealth? We're going to be talking about some wealth-changing habits that can definitely put you in the right frame of mind. Have you ever thought, one of the reasons why I think our program is so important is because we're talking about what wealthy people do, what millionaires and billionaires do. Now, not everybody is a millionaire and not everybody's a billionaire. We know that. However, their state of mind is much different. The way that we think about things are different. And that's what we really want to hone in on today is how wealthy people view the same product called life insurance that people of lesser income view it. And it's interesting. It's interesting. And I think you're going to be able to get from this how maybe if you want to be more wealth-minded, your point of view may have to change. Your training may have to change. And then your scope of your environment will be forever changed. Simply because you're going to be able to recognize wealth in many different ways, different conversations, and you'll start to see how they can do things differently. Hey, so I don't want to give much away. This is going to be a pretty good episode, and I can see you guys are already chiming in, so thank you for joining us. And I want to encourage you to do me one favor before we get started. Don't forget to hit the like button. Don't forget to hit the share button. Don't forget to hit the thumbs up button. Don't forget to tell your family and friends and stop sneaking, taking a look. Tell everybody. Get on it. Let's get on it and tell everybody that you're watching, right? So if you would be so kind, if you want to make a comment, don't forget to put the words takeaways in the comments. Because as you put the words takeaways, we can identify you quicker and we can talk about your notes or your statements or your questions while we're live today on air. And it's going to go pretty quick today. So I'm going to be looking forward to you guys asking questions because I know we've had a lot of off-screen questions. I'm going to ask you, for those of you that ask me those questions, please, ask them in the quote, ask them in the comments, hit the comments below, be interactive. I'm going to encourage you to do so. Why? Because when you ask, other people learn. And that's really what we're here to do, is to give financial education in a new way in a bigger way and ask the questions that you might have been scared to either ask someone in the private life or even pay for it. So you got a free opportunity right now to join us right here at Lifestyle Focus Wealth. I want to hear from you. I really want to hear from you. Hey, shout out to my Virgos. It's September. Everybody knows it's my birthday month. So I've been celebrating all week long, all month long. I think today is, 20th? September 20th. We still got a few more days to go. And, when we get the opportunity to share with family, friends, people just like you guys, it means so much to me, right? So thank you for all the birthday gifts, all the birthday shout outs and so forth. Keep them coming. You're spoiling your boy. And I tell you what, I really appreciate you guys. Loves it. And I love every one of you guys that tune into our episodes right here every week, 1 o'clock Friday, just because we're giving you the hot sauce and hopefully you're applying it as you're out there building your legacies and your wealth, right? That's what it's all about. So let's just get into it today. We're just gonna have some friendly chat about what it is like and how wealthy people view life insurance and how they view it differently than you. And then we're going to talk about how people that don't make as much money may view it. And the interesting thing is, when we're watching information on television, we got to realize something, folks. We're having a lights out moment if you don't know that this is happening. You're being marketed to. We're being marketed to all the time. And sometimes so much that we can't even justify why we think the way that we do. Because the programming is real. The programming is real. And that's one of the things that I can say that I'm so happy for. A platform like this allows me to have a conversation directly with you and answer those questions that may not necessarily have been asked by your television programs, or maybe you've just been thinking about it for a long time and haven't decided to ask the question, right? Well, we're here to just completely get all that out the way. Get all of that out the way. And if you're scared to be on camera and you don't want to put something in the comments, hey, I'm putting my email address right here below. And yes, if you send me an email, it may be a little slower, but I will get back to you. And I will get back to you. And maybe I'll read your comments on the next upcoming program. So look below, okay? Look below. It is info@roncojohnson.com. It's really easy to find me. I'm not hard to find. I'm making it so simple, right? Right? So let's get into it. Why are we talking about the dynamic between wealthy people and lower incomes and how they both view life insurance? And it's really interesting. Over the years, I must say I'm a licensed insurance agent. I've been that way over the last 26 years. And I can honestly tell you, some things we just don't pay attention to. And there's probably some advisors, some agents out there that are watching our program today. And I want to make sure that I say this in a way that it elevates and educates both the agent and the consumer that's listening today. Because a lot of times, I'm going to first start with the consumer. Consumer, put yourself in the advisor's role. They're offering the same product over and over again. And the facts don't change. Term insurance is term insurance. It's term insurance over a period of time. And that term ends at a certain period of time. And it increases at the end of the term. So if your term is 5 years, 10 years, 20 years, or 30 years, you pay a small premium for a period of time. But once it's up, it's up. And when I mean it's up, I mean it's up. The premium's going up, your age is up. Hopefully you haven't had any changes in your health and you've kept your diabetes away or kept your cholesterol from going up. Because if those things change, your premium goes up even more, double. And that's not considered an asset. Why? Because there's no cash in those policies whatsoever. It's just pure protection. And wealthy people don't tend to look at that product. It's interesting. Folks with lower incomes typically look at this as a means to protect their family. It's a budgetary restraint. It's a budgetary necessary piece of the puzzle, if that is a statement that I put out there for you. But when people are just trying to get by and they're just trying to make it and it fits in their budget, it's being viewed as more of an investment. And life insurance is not an investment. Here, I'm teaching you the word investment simply means taxable money. That's it. Let me interpret for someone who doesn't understand the language. So stop using the word when it doesn't apply. Life insurance is not an investment, y'all. There's no capital gains. There's no state and federal taxes unless you use it improperly. And we're trying to make sure that you don't use it in a way that would negatively impact you, right? However, let's talk about wealthy people for a second. Wealthy people tend to purchase more permanent insurance because they're not buying the insurance for the death benefit at all. They're looking at the tax advantages. They're looking at the leverage from the loans. Why? Because they don't have to pay income tax on loans. They're looking at the compounding interest effect on money that they've put away over a period of time. And it continues to compound uninterrupted. And I know there's going to be somebody out there that says they disagree with what I'm saying. Tell you what, go to your local computer, go to bing.com, which I really like, and they are not paying me for this, but I want to help you guys out. And because every once in a while we have a tendency to run into people who don't believe advisors that are out there. So go to bing.com, use their AI bill. I love their AI component. It's called Copilot. Click on it and type in what does it do. We're going to talk about what does whole life insurance do, what does term life insurance do. But here's the words I want you to look for today. And I don't have them on the screen, so I apologize, but I will put them in our notes. Wealthy people are looking for certain things in policies. And your agent may not be telling you the components that they're looking for. And I'm going to just spell them out. Number one, is your insurance company that you're writing your business with a stock company or a mutual company? You know, many years ago, the industry was full of mutually held insurance companies. And what this means to you, the consumer, okay, is that when the insurance company has an overage, they share that overage in the form of what they call dividends with their policyholders, you, okay? Shareholders, on the other hand, if your company is a stock-held company, the profits go back to shareholders. They don't have to share those with you. So you could actually have a policy and it says whole life on it, and you could not be receiving dividends. Got to look at the details very carefully. So I'm giving somebody out there a layup or an opportunity for you to go back and sit down with your trusted advisor and review. It's time to start reviewing. We're almost at the end of the year, folks. Don't wait till the end. Start now. Let's get those appointments scheduled and start talking to folks that can help you, right? And if you don't know where to go, if you don't have one of your own, please, I'm going to invite you to talk to us. here at Lifestyle Focus Well. All you got to do is go to roncojohnson.com and schedule yourself some time to talk to us. And I'll be more than happy to go through it with you to make sure you have the right information, okay? We want to make sure you got the right information. Feel free to ask. We want you to feel free to ask. The more you ask, the more you learn. The more you learn, the better decisions you make. The better decisions you make, the more wealth we create. Wow, that's really what this game is all about, is a wealth of knowledge. And wealth of knowledge makes us stronger. It makes all of us stronger. It makes us all move with more confidence, right? What else is it that wealthy people understand about this permanent life insurance thing? So we said, number one, you want to know, is it a stock company or is it a mutual company? Number two, you want to make sure that the policy's paying dividends. Wealthy people know how to chase life insurance dividends. I said it. Let's get straight to the point. The one secret nugget. How do you chase dividends? Let's level the playing field here. You know, what's in it for me concept. If you're a consumer of the product, you got to be asking yourself, what's in it for me? What's in it for me? If you can agree with that, give me a thumbs up in the chat and just say, what's in it for me, right? Y'all, I see my folks out there already got their fingers ready today. Get loose. I want to see you guys comment. I want to see you guys give me thumbs up. I want to see it all right? Because we want to make sure that our community is taken care of and they're doing the right things. Too many people are making mistakes, and these mistakes is costing you time. And time is the most valuable asset that you have. So don't be lazy. Don't learn off of all the TikTok videos. Sit down with someone who really knows what we're talking about and design it specifically for your situation. Okay? And someone asked me in the chat earlier, which one's the best? Is it whole life, term life, or universal life? Here's the truth. The best type of insurance to have is the kind that's in force when you need it. Absolutely. Because the insurance company, when they write your family a check, they're not even asking you, is it whole life, term life, or universal life? Unfortunately, we all have a start date and an end date. In over 26 years, I've paid my share of claims. And no one's ever asked me, was it whole life? Was it term life? Or was it IUL or UL? They just asked, do you have it? Was the premium paid? That's the question. If your answer is, I don't have it, we need to get started right now. That's my challenge to you. Let's get started right now, okay? But let's go back to how wealthy people think about the product. They're chasing dividends. They're chasing dividends. And here's two terms I want you to look up. The first term is called you want to know, is it participating? I'm sorry. We want to know if it's participating or not. Non-participating plans, look at the first page of your policy. It'll tell you if the policy says non-participating, that means they're not participating in dividends. And remember, I want you to start chasing the dividends. What's in it for me? What's in it for me? The dividends for you is that compounded interest and dividends giving at the end of the year based on the money that goes through an insurance policy. That is where passive income is created. And this is the wealth secret that most people are not having the exact direct conversation. Okay? They're not having it. So here's the terminology I want you to write down. And folks, if you're watching right now, if you would, when I say this terminology, I want you to type it in the comments. I want you to type it in the chat. I want you to type it over and over again. Okay? All right? Even make comments on the page, on our page. Make comments because they need to know. Okay, here's the terminology. Get your pen ready. I want you to write down that it's very simple. If your plan is not paying dividends, it's called non-participation. If your plan is paying dividends, it is a participating policy. Step 2, you're asked the question. Step 2 is this a participating or a non-participating policy? Because I want to know if we're participating in dividends or not, because wealthy people are looking to leverage the dividends. They're looking to leverage the cash value. Are we making sense? Give me a thumbs up. If we're making sense there, give me a thumbs up. Hey, happy Friday to you too. I see you guys out there, Milwaukee. I see you guys out there. Hey, look, I'm looking for my responses. I can't let y'all just sit back and just take all the notes and just get all this information and these nuggets without participating. I'll wait. I'll wait. I got the secrets. You need the secrets. So I need your participation. So let's work together and give a little bit to get a little bit. Okay? For you people out there that I know have been watching me for weeks on weeks, I tell you what, I know you're there. Our statistics in the background say 75% of the people watching, they're not subscribed. Stop cheating. Stop cheating. You're cheating yourself. Members only, please. Come on, be a member. Subscribe. Our community wants you here. And I'm going to give you the secret sauce to all the sources you need. All right? I promise you. But you have to participate. You have to participate. All right? We got to work together. It's only fair, right? It's only fair. All right, here's number 3. The number 3 question. We want to know this question. And this one, I want you to put 2 stars by it. Direct or non-direct recognition. Direct or non-direct recognition. And if you go to our pilot program over there at bing.com, you can put it in. What does this mean? What does this mean? It is so very simple. Just type it up and so you can see that your boy Ronco's not lying to you. Don't just take my word for it. I want to tell you where to go, and you can look it up yourself. Non-direct recognition means simply this. All the money that goes through your insurance policies in the form of premiums, this is how they base the dividend rate. If you have direct recognition, that means that they give you your dividends based on what's left over after loan. So let me give you an example. Let's just say we hypothetically had $100,000 sitting somewhere in a bank, a CD, somewhere that's less productive. And we decided that we're going to stick our $100,000 of cash in and above on our life insurance policy. This is how it works. That policy has a paid up addition or a level paid up addition rider to it. And when you put that $100,000 into that policy, if it is a non-direct recognition plan, it accepts $100,000 and it shows up in your cash value. It's not the cash value. It's really paid up addition money, but it shows up in that area, okay? That $100,000 is now subject to get a dividend if the insurance company that you're with has an overage for that year. And let's just say that dividend was 5.4%. That means that you're going to receive 5.4% on $100,000 that you contributed to your plan. Income tax free, because those dividends are added back to your policy. Does that make sense? Well, let's talk about if you take a policy loan. So now I know I have $100,000 in the policy that qualifies for my 5.4% dividend, and I take a $20,000 loan to do whatever I want with it. I can pay gas, I can pay lights. I don't have to wait till I'm 59 and a half. There's no surrender charges. There's none of that. But I'm still getting my dividend based on the $100,000 that I placed through the policy, because the policy is a non-direct recognition policy. I'm going to tell you a little secret. Everybody don't have that. Everybody doesn't have this little secret. It doesn't matter how big the promotions are on television. It doesn't matter how your favorite brand has it. If the policy doesn't do it, it just doesn't do it. So you need to educate yourself. I'm just here to help you guys out with some financial education. You might be surprised. But if you want the right answer, I want you to check in at roncojohnson.com, schedule some one-on-one time with me, and let me talk to you about the options that are out there that are available, because we have the answer. And I want you to fact check everything that we're saying, because we're changing lives. We're almost at 40,000 views. We're changing lives. That's the mission here. That's the mission. We're making an economic impact just by having a conversation. And that is more fulfilling to me than anything else I've done. So I want to make sure that all of our listeners are getting that right. So if you have a non-direct recognition plan, then you're probably going to receive dividends on the full amount that goes through the policy. It doesn't even have to stay in the policy. You can just go through it. But if you have a direct recognition company, and all you have to do is go in and ask your AI somewhere with AI, if my company is direct recognition or indirect recognition, it'll tell you. But if I have direct recognition, here's how it works. If I have $100,000 that I put into that plan and we take $20,000 out, leaving us with $80,000, we're only going to get a dividend of whatever their percentage is times $80,000, not the full 100. Do you see how powerful this can be? This is so very powerful. So when we talk about the big banks and how they use insurance policies, or wealthy people who may have millions of dollars that have that pass through the plan, they're able to have access to this money without taxes. And it does not interrupt if they're compounding interest or dividends. If they have a non-direct recognition company, a mutual company, non-direct recognition company, you got to have them all. You got to have all of it. And that becomes a powerful piece of leverage, because these people, think about it. If I had $2 million just to use this number, and it over time went through a plan at 5.4%, I'm receiving $108,000 a year, income tax free, in the form of a dividend. So if I'm receiving $108,000 a year, tax free, that has nothing to do with my job. That has nothing to do with my side gig. And it's not taxable income. So what did we just do? The interest for you as the consumer is you can almost use this as most people use a pension plan, if you will. You can create it on your own. This is the incentive to maximize in the plan. Is, hey, wait a minute. If my plan has a non-direct recognition and it's a mutually held company, I probably want to put as much money through my plan as possible. Probably my whole paycheck. Why? Because I can get access to it. I can get access to it, use it, and still earn a dividend on that money, even though I took some out to live on. That sounds pretty interesting to me. Is that a thumbs up? Is that a thumbs up? If you understand what I'm saying, give me a thumbs up in the comments, please. I want to make sure you got that information. And for some of you guys, we got some new advisors on the line. We got new people coming in and getting involved. And I know some people are saying, I don't have that already. They already know they don't have that. Where can I get one? Where can I get one? And if you're an insurance agent out there and you're offering this product to the masses, you owe it to yourself to know what you're offering to the people. Why? Because you're either part of the problem or you are the problem. And this is why so many folks don't have the same results when it comes to planning using insurance, because they don't know the details. And someone that sold them a policy, yes, it's life insurance. Yes, it's a company that you might recognize, but there's certain features that wealthy people are looking for that people of lower income don't know to ask for. And we just gave you the secret sauce, right? Right? So when we get back from our break, I want to make sure that you have an opportunity to ask me some questions when we get back. These are reasons why you should be a part of our community, Lifestyle Focused Wealth. I'll see you in a second. Hey, join our Lifestyle Focused Wealth community. Membership starting at $16 a month when you pay the annual subscription. So register online today at www.lifestylefocusedwealth.com. Hey, everybody, I'm Ronco Johnson, your Lifestyle Focused Wealth Coach. But today we're talking about the difference between how wealthy people see life insurance and how lower income people see life insurance. And it's two different dynamics. We're talking about leverage and how we use it, right? So let's talk about lower incomes for just a moment. If you are in the lower income bracket and you're not a six-figure person, or you're just making a modest income and you're almost paying check to check, most of America is with you. So don't feel like I'm pointing the stick at you, because it's true. Some of us don't see where we can pay the lights, the gas, the water bill, and all the stuff that's coming up, but that's okay. I got a solution for you. Your boy's got you. I got you, right? I'm going to take care of you. Here's the answer. Most of the time, you'll see term insurance in lower income families, or people who have come from low income families. You'll see term insurance all the time. Why? Because it's more affordable. The only downside to term insurance is you don't have any ownership. You don't have an asset. It's not building up, and you can't use any of the dollars that you've spent in the reserves for emergency fund. And we think having an emergency fund is important. Why? Because you're going to have an emergency and you want liquidity. I want something I can get my hands on really quickly. But most of the time, what you see is someone buying a term insurance policy for the purpose of fulfilling a term. Maybe you bought a house and you got a 30-year mortgage, and all you want to do is cover your mortgage. That's a 30-year term policy because the commitment is 30 years. Maybe you're a business owner out there and you got into a business deal with another partner and you want to make sure you're using it in some key man insurance type of stuff. You can buy a term policy. Probably is not the best way of looking at it. But in this particular case, you can do that. Why? Because you just want to make sure that you're covering the value of your other business partner. And in covering the value of the other business partner, in case one passes away prematurely, we can at least have the financial reserves to replace that person in the business, or buy them out, or buy their family member out. We'll have an episode on buy-sell agreements here soon. But these are some of the ways that term insurance has been used. But it really becomes more of a situation as people age. And some people do not buy term, invest the difference. Sometimes your investments don't do you any good because we don't know exactly when you're going to retire. If we don't know when you're going to retire, it's hard to figure out how much money you're going to have unless we've done some additional planning. And this is where wealthy people sit down with financial experts like myself, and we go through it. We talk about your tax planning. We talk about your budget. We talk about your company. We talk about how we use these products and these tools in our lifestyle focused wealth philosophy that I'm sharing with you. And this is what matters. This is the secret sauce that matters. You got to have it tailor made just for you. Can you imagine a guy my size going into your favorite store and getting a size small shirt? It wouldn't fit over my great big old head. One size does not fit all. So if you're going into the store and you're shopping for financial products that everybody can get, or you think, oh, I'm just gonna get 100,000, that's enough. I got news for you. You're underinsured. If you got 500,000, you're underinsured. If you're 25 years old with a job making $40,000 a year, and you go out and buy $500,000 of life insurance, you are still underinsured if you're properly doing it right. And if you want to know why and how, check me out on the website down below, roncojohnson.com, or go to our website, lifestylefocusedwealth.com, and we'll be glad to answer those questions for you, right? Boy, I tell you what, y'all know I love y'all. You know I do. I just give y'all all the secret sauce all the time. All the time. I hope and pray that I'm helping someone out there, because that will bring my heart joy. That will bring my heart joy. All you have to do is start accepting information, start researching the information, and then start applying the information. But I would be careful. I would start looking at it. If I found that what I said is true, the second and third part, you got to make sure you got an advisor that you trust. And maybe the person you heard it from is your best choice. So I want to be very open. I want to be very transparent with you, because we want you to start thinking with your wealthy mind. Wealth, it's not about cash. It's about saving time. And that's what we're here to do, is help you save time so you can create moments, and significant moments, abundance, and moments that you care about. And guess what happens? Your blood pressure goes down, your weight goes down, the people around you smile bigger, and your day just starts having a higher vibration, because you're living your dream. You're living your lifestyle. Hey, everybody, I'm still here. Ronco Johnson just signing off. I don't know exactly what happened, but I'm going to assume that the powers to be didn't want me to give you that information. So we made it back. Good to see you. Good to see you. Good to see you. This is Lifestyle Focus Wealth. I'm Ronco Johnson, your host. And today we've been talking about, and we finished up our conversation as it pertains to how wealthy people think about insurance, right? And how people of lower incomes think of insurance. It's amazing to me how the two do not see it the same way. And you might have to ask yourself, hey, what environment was I brought up in? Because that might answer or give you an answer to some of your feelings about why you feel. Not all of us have resources. Not all of us come from money. And not all of us have people around us that have the lives that the privileged do. This is why this programming is so important to you. And that's why I say, if you don't know, you're having a lights out moment. Hopefully, we've been able to give you information that can help propel you into the world of wealth, significance, and abundance. And you start to intertwine that with the lifestyle that you're living. Everything you do should be about you being happy. It should be about money coming from a safe place and you and your family positioned in a way that makes you comfortable. And you'll start to find out that less and less stress happens. Less and less stress happens simply because you absolutely know and have control of your finances. You have control of how you think about money, and you're applying the knowledge that you're gaining every single day. And over a year's time, 2 years' time, 20 years' time, you will become an expert at what we've been talking about. And then you can also say, hey, I'm living a very lifestyle focused life. And really, that's really what we want to do here. That's really what we want to do here. That's why we call it our holistic philosophy. It's easy to understand. We weren't going to make it too complex for you. Why? Because you don't need the stress. We don't need the stress. You need to have someone that's very simply telling you exactly how the programs work. Not above your head, but directly to you. And then we can start to talk about how we're going to design the program around your lifestyle. And that is the difference. It's needing to fit you, your spouse, your children, your business. That's your lifestyle. And if you can incorporate it in things you already are doing, that's a bonus. That's a bonus. Because you're not thinking about it, because you're not stressed out about money anymore, and you've been able to take advantage of what wealthy people do. You have the freedom that we've been talking about. And really, that's all we want to do is give you the freedom, give you the ability to think the way you think, to travel, to not run from taxes, just understand why taxes are there. And then you need to be able to maximize on those opportunities because they're your opportunities. If you fail to look at them, that's really on you. You're having a lights out moment. And we're just trying to make sure that that doesn't happen. That doesn't happen. It doesn't need to happen, right? So how have y'all felt about this information today? I'm sorry for the interruption, but I'm glad you stuck around. I'm glad you stuck around. Do me a favor. All I want you to do is go out there and get on our calendar. Let's go. Get on our calendar, folks, And all you have to do is go to roncojohnson.com, get on this calendar right here, and let's see if we can have some one-on-one time. Why? Because I think you need it. I think you need it. Get on our calendar so we can talk to you about what it looks like. We even got a phone number for you. You can send us an email at info@roncojohnson.com, or you can even give us a phone call at 770-321-1337. And somebody from our staff will be happy to answer the call and to get you some one-on-one time with me so that we can actually make sure you're on the right track. Because there's nothing more important to me than to make sure you have the details. We want you to have the details. Okay? That's all we want. And if you have the details and you have the understanding, then we want you to be an advocate and go out and share it with someone else. Simple as that. Simple as that. All right? Hey, listen, that's my time today. I've enjoyed talking to you. Thank you for the thumbs up. Thank you out there. I see you folks, Donna. I see you, Sam Johnson. I see you. Thank you guys for hanging in there. I'm always looking for you. So don't y'all miss a session with me ever. All right. And for those of you that are brand new, thank you for joining us. God bless you. Have a great weekend. And look, don't do nothing that I wouldn't do. Keep it clean and keep it fun. And it's all about your lifestyle. I'm Ronco Johnson, your host. I'll see you next week, 1 o'clock, Friday, Lifestyle Focus Friday. Good afternoon, everybody. I will see you next week.